wondered why the market always goes against you? Many times after you've bought a share, then share prices started to drop. Is it because that the market doesn't like you? How do we overcome this situation then? M+Wiz, which alerts on potential entry for trending stocks, might do the trick for you. Is that all for the Wiz feature? Not at all. To find out more, please visit us at mplusonline.com/wiz. Have you ever wondered why the market always goes against you? Many times after you've bought a share, then share prices started to drop. Is it because that the market doesn't like you? How do we overcome this situation then? M+Wiz, which alerts on potential entry for trending stocks, might do the trick for you. Is that all for the Wiz feature? Not at all. To find out more, please visit us at mplusonline.com/wiz.
All right. Okay. Hi, good evening, everyone. Okay. This is Elkie here with you guys today. Okay. Yeah. Good evening, everyone. All right. Okay. It's approaching 8 p.m. So, let's start our section today. Okay. So today, my name is Elkie. Okay. My name is Elkie, and I'm your speaker for today. And today, our title is a little bit boring, but for me, I think it's very essential to know about it. Okay, especially when if we want to achieve a good trading result, a good one and a consistent one. Okay, so our topic today is risk and reward management. Okay, yeah, I know it sounds a little bit boring, but let's do it. Okay, I'm just gonna go through the details, and I will try to portray this topic in a slightly different manner. Okay, hopefully you guys can able to benefit and also pick up something out of this out of today's section. Yeah. Okay. And thank you very much for joining our section today. I know that is coming near to the long weekend, and everyone is really on holiday moods. Okay, but if you know that any of your friends that they might be traveling, they might not able to join the section, and you think they will be interested to know, please do tag them in the comments so that they can view and play back our video later on. Okay, our video will be able to play back in our Facebook and also YouTube channel. Okay, M Plus Online TV. Okay, you tag them, then they will able to view it later. Okay, so that they able to grab something from that. Okay, sharing is caring, right? Okay, so before I start today, I would like to just start with a quote. Okay, a quote from the great trader Paul Tudor Jones. Okay, so from Paul Tudor Jones, okay, a great trader is not only focusing on how much money they can make each time, okay, but also they will focus on the money that they have at risk and how much capital they is at risk at every one time. Okay, yep, just checking that I opened my mic. Sorry. Okay, so in trading, when everyone comes into this trading world, this investment world, the first thing that always come into our mind is how I'm gonna make those big bucks, how I'm gonna approach the market, how I'm gonna make the market, how am I gonna make money. It's all about make money. Okay, but if we stop for a while and think, okay, this, to be honest, to be frank, this is a world whereby more than 80% of the traders they fail. They unable to make money consistently. I'm talking about the whole world. Okay, not only stocks but including futures trading, bonds, treasuries, commodities, everything. Okay, in this investment world, is this financial world, more than 80% of the traders they are losing money. Okay, they have been losing money. Okay, so if we come into this arena and we just focus on making money, isn't we might be one of those 80%? Okay, so maybe before we start trading, we want to tweak our mindset a little bit. This is a world that is so dangerous, which is so which is full of danger, and so many people they fail in it. Shouldn't us thinking how to survive in this market first? Okay, that brings me to share today what is all this content that I'm gonna share today with you guys today, which is how we can focus on the money that we have at risk and how we can manage it. Okay, so good evening, everyone. For those who joined us late, my name is Elki, and I'm your speaker for today. Okay, just a brief introduction about myself before I continue further. Okay, I am a stock dealer with M Plus Online. Okay, Malacca Securities, and I'm in this industry. This year marks the 10th year of me in this industry. I started as a futures dealer, and I was a PDT as well. PDT, which is proprietary deal. Proprietary desk trader, okay, which I was trading for company using company fund. And before I joined M Plus Online, I was focusing on commodities. I was focusing on indexes, forex, all these things, everything. Okay, then when I joined M Plus Online, my focus switched to stocks, and I've been sharing with many of my clients and also on a public audience since 2015 until right now on all this knowledge that I gathered and I learned from the professional and winning traders when I was doing a PDT. Okay, so I'm sharing my experience. So In the process, if you think that's anything that you do not agree, you can feel free to type it in the chat box, and you can look for me. Okay, we can discuss, we can talk, and in this financial world, there's nothing as right or wrong, but as long as it's a method that can help us to make money, that it is something that we really want to explore, we really want to look into it. All right. Okay, so let's start our session for today. All right. Okay. So all the ideas and all the contents that I'm going to share is solely my opinions. Okay. And it should be treated as general information and shouldn't be taken as investment advice. Yeah. Okay. So let's move on to what are we going to talk today is we're going to look into what is risk. Okay. We're going to try to define risk, this word. Okay. I know it's a word that many of us, many of you guys, you do not like it, and even some of us, we avoid it. Okay, and I'm going to share with you guys how we should accept it instead. Okay, and after we are able to accept it, next is how we can manage the risk. All right, so let's start with define. Okay, let's start with define a successful trader. What makes a successful trader? What do you guys think? Okay, what do you guys think? Who can call himself a successful trader? Someone who make a million from the market, someone who can make 100 million from the market, or someone who can consistently making money from the market every day, every week, every month. For you, what does it mean as a successful trader? Okay, so I believe everyone have a lot of definition of what is a successful trader. But we can see that when we talk about successful traders, it's always about a profitable trading result. He must have a profitable trading result. Then only we can say that he is a successful trader, regardless the amount is big or small. Because some people, they can hit 100 million in his during his journey. Some can hit 100 billions. Yeah, so everyone have a different risk appetite, I would say. Okay, and that actually set how high the level that he can achieve. But as long one can able to achieve a consistent profitable trading result, then I would call them as a successful trader. Okay, because believe me, it's not easy to consistently making money from this market. Okay, yeah, because there is always something that might come in and then screw up your mind and break the consistency. Okay, so it's really not easy to be consistent, and as long one can be consistent, I would say that he can call himself as a successful trader. And in order to achieve a consistent and profitable trading result, there are three main pillars that we need to focus on. The very first one, which is most of the people they focus on, is trading strategy. I believe all of you guys, regardless today you are a new trader or you're seasoned traders, okay, the first thing that you come into this market, most of the time you guys focus on trading strategy. What is the approach to buy and what is the method to sell? Okay, but at the starting, most of the traders, they focus on how to buy, how to get into these markets, and that is the trading strategy. And there are some traders who also think that as long I can get in the market at the correct price, correct time, then I would be able to make from the market. Then definitely I will be able to beat the markets, make money out from the markets. That, for me, I would say that isn't true. Yeah, that isn't true. Even you have the world best trading strategy, you might not able to achieve a consistent, profitable trading result. Okay? Yeah, for me personally, I have strategy, I have trading approach that able to help me to achieve at least 80% winning rate and above. Okay? Yeah, for short-term trading. Okay, and my when I was doing PDT, the best result that I can achieve is I able to achieve 100% winning rates in throughout 2 weeks, and my manager was able to do it for 4 weeks. Yeah, but even we have this kind of trading strategy, trading skill, we wasn't a successful trader because we wasn't expert enough, or we wasn't trained enough on the psychology and also on our risk management. Okay, so beside trading strategy, yes, it is very important for you, for everyone to have a trading strategy in order for us to execute our trade consistently. But when we are doing that, we also need to have the correct mindset, which is the psychology, and also a correct risk management. Okay, imagine today you're able to make a very good trade and you make tons of money out of it, but you do not have a correct risk management, and you do not manage your emotions, manage your mindset well, and the next trade you lose back everything. Okay, so are you a successful trader just based on one trade? No, right? Okay, so that's why we can see that these three together, they are essential in order for one to become a successful trader. Okay, so today I will be very much focused on the risk management part, and we can see that it's very actually interrelated. So I'm going to share with you guys later on how we go into risk management part. Okay, so like I said just now, trading strategy, it is the one that everyone focuses the most, but it is actually the one that easiest to achieve. Because how you can achieve or how you can get a trading strategy, what you need to do is you just observe the market pattern. Okay, you just observe a market pattern, you make a hypothesis, back testing it. If it works, then you got a trading strategy. As simple as that. For example, like before Hari Raya, right? Next week is Hari Raya already. Okay, before Hari Raya, we might see consumer stocks like Padini or like consumer staples stocks that might have buying interest. So we observe, we make a hypothesis, and next we just check every year the data every year for the past 5 years, 10 years, 15 years, every time before Hari Raya, is there any buying on all these stocks? If yes, then we actually got a trading strategy whereby every time before Raya, then we buy some of these consumer stocks. Okay, that can make us a trading strategy. Or we can, if you are technical traders, then we can do it in the sense that, okay, I look at the RSI. If the price hit the RSI above the overbought levels, oversold levels, and then it comes with a MACD bullish divergence, then I will go in and buy with the I will go in and buy. Okay, if out of 10 times, 8 times, or 8 times, or 8 times making money, then we might want to try to use these methods to trade. Okay, so you can see the trading strategy is actually the easiest to get it. Okay, but when it comes to psychology, where it involves with all these emotions like fear, like greed, like your pride, you're unwilling to lose, or you even have a gambler mindset, these are some of the things that is hardly to control. Especially trading is a split second decision. Okay, at that moment you might be great, and then you just take out your phone, log in, key in the number of lots you wish to buy, trading pin, bum. That's all you got. You got the share on hand. Okay, and worse is if the price go against you, and if you're unwilling to lose, and you might be holding the shares for a week, 2 weeks, or even 1 or 2 years. Yep. And to be frank, that happened to me before, especially when I just started to come into this industry. Okay, and that happens to almost everyone before. Okay, so don't feel shy. That's actually really, really normal. Okay, so that's why we need this risk reward management to help us to avoid all these things and also help us to survive in this trading business. It is so important, but it is always the part that being ignored by most of traders because they think, because why it is always being ignored. The reason is because when everyone come into this market, they hope they will be making money. So all the focus are always at how to make money, how to how to take profits, where to sell at the highest, but they ignore what to do when the position go against you. Okay, yeah. So that's why today we need to talk about this topic and be able to prepare ourselves. What if our position gone wrong? And by doing so, it helps us and it protect us from having a catastrophic losses, a losses that might able to wipe out our account, a loss that might leave a deep mark in our heart, in our memory. Okay, do believe me, they are traders, they are traders, they are investors who lose until they don't dare to come in and trade. I remember that's one year. Okay, it was in 20, not 19 something or 19 something. I'm still in primary or secondary school. I think it's somewhere around I think it's 2014. Okay, I think it's 2014, and it was an election year. Okay, I don't remember it's 2013 or 2014. It could be 2013. Okay, it could be 2013, and it was an election year. And that time I was on the futures business. Okay, stock index futures, commodity futures, and I was talking to my clients all this thing. Okay, there is this one client who he was betting on the election result. Okay, he was trading futures, building the position based on the speculation of the election results. Okay, and he was building up the position, and he has been averaging down or averaging higher regardless the position is going into profit or losses. But of course, most of them they are in losses. Okay, he was building that, and when it comes, and he keep on believe that what he thinks is true. Okay, he believed that the during that time uh, the opposition will win the election, and that would cause a strong a tumble in the index market. So that's why he have been building the short, and even though the market has been going higher, what he do is he just keep on averaging down. Although we highlight on the risk, maybe he should consider the stop loss, all this control and protect his position, but he just keep on averaging down. And just one trade, just one speculation that he believed that the opposition going to win the elections on the election day, the result, when the results announced, confirmed, the government say the index market shoot up high on that day itself. He cut all his positions. He emptied his account. He cut all his position, and until today, I still can remember that he's screaming and said he is so regretful and for not managing his risk and just keep on betting on this direction that based on his gut feeling. Okay, so this is one catastrophic losses that caused him not to trade anymore. At least for another 2 years when I was there, he wasn't trading anymore. Okay, so I'm not sure if he is coming back this year or next year for the elections or not. This one I do not know. Okay, But this is something that is we really want to manage the risk to avoid all this incident. And in the process of doing so, it actually can help us to minimize the losses. Yeah, and also one of the reasons why managing risk is so important is because we really need to learn how to manage the risk, because believe or not, losing money is really part and parcel of the whole trading process. Even the best trader in this world, they will lose. Okay, we can see in the year 2020, okay, in the year 2020, Warren Buffett, I believe if I call him the great investor, the legend investors, traders, no one will disagree about it. Okay, but even him also cut loss on his airline stocks, as to airline stocks in the year 2020. Okay, imagine if he didn't cut loss. One of it, like let's say Delta Airline in the year 2020. Let's look at Delta Airline in 2020. Okay, in the year 2020, somewhere around here on the April 3rd, he announced that he took a huge losses from the all these airline stocks. Yeah, it is about he took somewhere around he sold somewhere around 30 million of Delta shares for about 314 million. Okay, and during that time he lose a lot on this Delta. But imagine if during that time, if he didn't, maybe some of you guys will think, oh, what if during that time he didn't cut it and hold it until today? Okay, that time the price, it could be at 20, 28, 25, or even lower. The lowest it gone is 19 something. Okay, it might cut at a better price at 32 plus, but regardless what price it is today, the price is still higher, right? Okay, so maybe some of you guys will be thinking, what if he didn't cut today? He will be making. He is a long-term investor. Then why don't he just keep it? Yeah, you're right. If he just keep from that time onwards until right now, all his airline stocks will in profit position. It will be profitable. But one thing that we ignore is the opportunity cost. Okay, you can try to find out how much he made after he cut the Delta Airlines, how much he made moving the funds into the technology stocks, into mainly technology stocks. Okay, how much he made from that. Okay, so if he never cut the airlines and regain the focus and move the money into the sectors that is rallying during that period, that benefiting from the pandemic, then that is the opportunity cost. That is the it will cost him this opportunity cost and not able to make that kind of money. Okay, so although he had a cut loss, but it is for a better outcome. Okay, yeah. So even for Buffett, during his meetings, he also have been saying that his Apple stock sales is a mistake. He admit his mistakes. So even the best trader, they make mistakes. Okay, and imagine if today you bought into ARK. Okay, ARK has been making all these gains since 2020, riding along with the technologies rally. Okay, and when that is a selling, okay, when the selling came and technically broke lower, developing into a downtrend. If you do not cut, imagine how much you will be down from top, from the highest. It will be 60% down from the highest, from the peak right now. Okay, so this is why it is so important to manage that we need to manage the risk, because even the best trader will make mistakes, and we do not know we are making a mistake at that time, because when we are in the trades, we will be biased. That's why all the risk management plan, all the risk controlling has to be done before we enter a trade, enter a position. Okay, but many times before we're entering a position, many traders, they do not like to think about risk, because for them risk equals to losses. If I think about risk, it's like very sway. In Hokkien we call it sway. Like before you trade, you're already thinking, what if you lose? It sounds really discouraging. Okay, and for some people, they think, hey, if I think I will lose, then I don't go in this position already. Okay, correct. Yeah, if you think that you will have this kind of mindset, okay, please do put your hands up in the comment. Okay, we won't laugh at you, because many other traders, they might have the same idea. And today I'm here to tell you guys that risk is something that we really need to face it. It is not a bad thing to look at the risk. And risk doesn't represent losses. It represents the losses that we can minimize and we can avoid from having it. A big loss that we can avoid from having it, avoiding it from hitting our account. Okay, and also maybe some of you guys think, okay, I believe that I can take the losses. When I trade, I trade, I already prepared to lose. Yeah, some of my clients, they tell me this. So does that mean that he really prepared to lose when the position go against him? It sounds like he is, right? But many times he doesn't. We have this wrong perception that today, even I tell myself that I'm engaging in an activity that might cost me a fortune, which I might be losing. Okay, then, and also I'm thinking I'm a risk taker, but in fact, when the thing happens, what we do, our behavior, it actually tells a different story. Naturally, from a risk taker that we think we are, we resulted in doing the opposite way. Okay, let me show you some of the example. Yeah, okay, it actually involved this thing called loss aversion. Loss aversion is a behavioral a behavior whereby investors, unconsciously, they are so fearful of the losses that they focus and trying to avoid a loss. Okay, more, they avoid the losses more, but they will focus on how to make gains, how to make profits from the markets. Okay, yeah, so it is really normal and it happens to everyone, because we feel the joy when we are thinking about the money that we can make from the markets. And if we think about the losses, or if we imagine about the losses that we might have to take from the trade, that makes us feel so-called pain. It is some feeling that most people, they would want to avoid. This is a survival skill that's planted inside us. Okay, and unconsciously everyone will do that. And yeah, research shows that for every investors, they will feel the pain of a loss more than twice as strongly that they feel the enjoyment of making a profits. So that's why every time we have a loss, we actually feel it more. Okay, at that moment we feel it. We can feel that the losses is so big until we don't want to experience it anymore. And eventually, when the times goes by, we tend to forget the losses. Like it is also part of our mechanism so that we can continue to live on. Okay, so that we don't hang on all this painful experience. Okay, and all this mechanism that we have in our body, in our brain, they actually lead us to have this behavior of selling winners and holding the losers. Okay, This is exactly the opposite of riding on the winners and cutting loss short. This is totally the opposite. Everyone want to ride the winners and everyone to cut their loss short, but in fact, our natural mechanism in our brain, in our body, lead us to selling the winners short and holding the losers. Okay, let's look at the first scenario. Okay, let's look at the first scenario. Okay, okay. Imagine today I let you choose. Okay, I let you choose. Okay, if I give you two choice. Okay, I give you two choice. The first option A. Option A is if today you can choose between the option A is to make a guaranteed profits of 900 ringgit against to option B, the scenario B, whereby there is 90% chances that you can make 1,000 ringgit, but there is the remaining 10% of probability that you might be making nothing. How would you choose? Although the expected value for the both result, they are the same. They are both 900 ringgit, $900. Okay, but most of the people, they will choose the options A. Okay, so if you're choosing options A right over here, okay, please type A in the comment column. Okay, you try to ask yourself, okay, today if I can get a guarantee 900 ringgit, 100% get a 900 ringgit against to 90% I will get 1,000 ringgit, but 10% I will get zero. How would you choose? Frankly, I will also choose A because at least I can get 900 ringgit into the pockets. I won't be risking I won't be taking any risk to risk getting nothing just in order to get an additional of 100 ringgit, which is about 10% more. Okay, so I'm really honest. I'm definitely will be on the risk averse side, and I will choose the sure gain, like what most of everyone will do. Okay, except CK lah. CK is choosing B. Okay, he is a risk taker, risking the 90%. But logically thinking, the 90% of the chances you'll be getting 1,000 ringgit, and it is a good risk to take. Okay, but let's look at the scenario 2, which is very similar. Okay, if there is a scenario whereby one is you definitely lose 900 ringgit, and also the second one is you have 10% of chances losing nothing, but 90% chances that you will lose more at 1,000 ringgit. Which one will you choose? Would you be taking a guaranteed losses of 900 ringgit, or would you be taking a bet that 10% you might be able to break even, and 90% of the time you might incur bigger losses of more an additional 10 plus percent more losses? Which one will you choose? Okay, so if you think that you choose number 1, please type 1. If you think that you choose number 2, please type 2. And the result of the experience is most of the people, they will choose number 2, because when it comes to any chance for them to break even or not having the losses, even the percentage is so tiny, they will take it. They'll be looking for this risk, even the chances are so slim, they will take a gamble and hope that they will have to pay nothing. Okay, and eventually they ignore that 90% of the chance they will have to pay more. So this is really the same like when we are trading a stocks. Okay, like when we are having a winning stocks, it's either we can take profit now with a 10% gain with a little winning. Or option B, we might have the chance of we might be break even, we might lose back and not making anything, but we also have the chance of riding the uptrend and make much higher, maybe 50% or 100% more in 1 year time. Which one will you choose? You choose profit, realize the profit immediately right now with little gains, or would you take the chance to ride on the rally? Okay, so that is when it comes to the winning stocks. Okay, so maybe some of you will choose A, some of you will choose B, but when it comes to the losing one, okay, C is either to cut loss now with a 10% losses, or D, you have the chance to break even, but you might lose even more, maybe an additional 50% more, or you might lose everything in if you hold on to the shares. Okay. And when it comes to losing stock parts, I do believe that not from talking, but from what I see in real life, many they actually opt to the options D. Okay, even as long there is a single chance that it might rebound, it might break even, most of them they will hold on to it, and the losses will rule from 10% to 20%. 30%, and it grew until it is so painful for them to cut, and they stick with the losing stocks forever, hoping that one day it will rebound and then he will able to break even. But if we stop and think about it right now, logically thinking about it right now, you might be risking all this opportunity cost holding onto a stocks that is losing money, producing any gains, stuck with the money just to break even in maybe 5 or 10 years time. You're just hoping for a break even when it comes back, and that doesn't make sense, right? If we try to think logically right now, because if for a losing stocks to rebound and come back from a steep losses to break even, many of them they will have the fear factors to come in and then break even the position. That would happen to most of the people. Okay, so when we do not have any position right now and we really think about it, that really doesn't make sense. Okay, so instead of going into betting for a slim chance to break even, why not we manage the risk and change our mindset to cut loss? Always cut loss with a smaller losses. Take the losses, move on, go to the next trade, and try to make back the money from the next trade. Okay, and by changing this mindset, it actually will help you to accept the risk. It will also help us to not only accepting but also embracing the risk. And if you have done that, if you have really hear into it and accept it fully today, eventually you'll find that you will not lose discipline, focus on confidence anymore, because you will no longer being afraid to be wrong, because you accept that making a losing trade is part of the trading. Making a wrong investment decisions is normal. And knowing that, you will be very careful in executing every single trade, and that would actually prevent you from being reckless in executing any trades. You can see it is one step leading to the next step and another. So the very first step that today we have to do is we have to accept the risk fully, wholeheartedly. Okay, then only we can move on to the next step, and that would help us to change our mindset and help us on achieving the result that we want from the psychological aspect. Okay, so the very first thing is we want to believe that cutting loss will do us good. Okay, repeat it together with me. Cutting loss will do us good. Okay, cutting loss will do us good. Tell yourself that. Accept that. And once you have do it, like I said, you won't be bothered by being wrong. You won't be bothered by losing money. You won't be bothered by missing out the chance, or you won't be bothered by taking the profits and yet the stock price continue to go higher. But you will be focused on consistently approaching the market and make the profits consistently from the markets. And that would lead you to become a successful trader. Okay? Yeah, maybe what I'm saying right now, it sounds a little bit empty for you guys, but do believe me that this is what I have experienced, and also I have learned from some of the great traders in the markets. Okay, these are some of the things that I have learned in the hard way throughout the 10 years I'm in this industry. Okay, so I hope that what I'm sharing with you guys today, it can go into you, and you guys will be able to accept and also embrace the risk. Okay. For the next part, we'll be talking about something more technical, like how we can manage the risk. Okay. So on the managing the risk part, it's actually very simple. It's all about setting the rules. So some approach, we can take some approach on how to manage the risk. Okay, some of them is like setting a 2% rules. Okay, setting a 2% rules. By setting the 2% rules, it can help us to have a better surviving chance in this trading markets. And not besides of the 2% rules, next we also have I will be also sharing with you guys how to set a correct trading size. A trading size is very important, because in the event where you overtrade it, okay, the P&L, the profit and losses, will definitely come and play around with your mind, and that is the time where you will be losing your mind, and you're not able to follow your trick plan. Okay. After that, we will talk about a little bit on the risk and reward ratio, and also about the stop limit. Okay. So first, the 2% rule. The 2% rule, it is a strategy. A strategy to protect the account. Okay, so it is a strategy that to help you to avoid losing most of your money, or even all of your money in one trade. All right, so the 2%, you can set it 2%, 3%, 5%, is totally up to you, up to your fund size, all this. Okay, but as a benchmark, you can set it as 2% rule, because with the 2% rules, it is giving us a chance to have a 50 times fighting chance. Because if we set a 2% rules, we will only wipe out our whole all of our capital if we have been continuously wrongly 50 times. Okay, we only will wipe off our capital if we lose 50 times. Okay, and that actually gives us a much higher probability to survive in this market. Okay, so you can look at the example. Let's say if you start with a total capital of 20,000 ringgit. Okay, this 20,000 is the money that you're willing to lose in this market. Okay, that you already prepared. It is the spare money, and you prepared for this trade, this investment. Okay, you're willing to risk this 20,000 ringgit. So if we take 2% of this 20,000 ringgit, it means that for every single trade, you shouldn't lose more than 400 ringgit. Okay, if you set it to be 5% rules, then it is 1,000 ringgit. You shouldn't be losing more than 1,000 ringgit in one trade. But of course, If you set 5% rules, then you only can afford to lose 20 times in a row. All right. Okay. So it really depends on you. Okay. Because if today you are setting the total capital that you're willing to lose is only 5,000 ringgit, and a 2% rules is 2% of 5,000 ringgit is only 100 ringgit. Okay, it's only 100 ringgit. Then it's a little bit tough to you to control your losses within 100 ringgit. Okay, because we have to include all this brokerage, clearing fees, stamp duty, especially stamp duties has increased. Okay, yeah. So it really depends on you. Okay, but this is the idea. This is the idea of how we can control to wipe off our losses in one single trade. Okay, so if you have set the rules, the next thing is make sure you strictly follow it. Okay, no matter how you think the market might rebound, no matter even if you think that this could be the lowest point and it might rebound all the way from there, if it hit the amount, just cut it. Okay, tell yourself that for this trade the max that I can lose is 400 ringgit, and if it hit 400 ringgit, then I'm gonna just cut it and not looking back. Okay, yeah. So after we have set the maximum losses that we have in a single trade, next we can adjust on our trading size. Okay. So let's say for this counter stock A, it is trading at 1 ringgit. Okay, and technically I want to set my stop loss at 94 cents. Okay, I want to set my stop loss at 94 cents. So that is a 6 cents away, 6 cents of the stop loss. So if you trade to 94 cents, I want to cut. Okay, if you trade to 94 cents, I want to cut. So what I can do is I can use the 400 ringgit that I'm willing to lose, the maximum losses that I can take, divide by 1 ringgit minus 94 cents, which is 6 cents. Then I will get 6,666 units. And we write it down, which is we can trade 6,600 units for this trade. Okay, so many people when they trading, deciding what is the trading size that they can trade, they would just simply, I have 20,000 ringgit. This stock is 1 ringgit. Okay lah, I whack 20,000 units all in at one time. Okay. So imagine if you whack 20,000 units at 1 ringgit, and if it really come down all the way to 94 cents. For the 20,000 units, you will be losing 1,200 ringgit in this trade, and 1,200 ringgit over a 20,000 ringgit that you have is 6%. Okay, you will be losing 6% in just one shot. And what does it mean by losing 6%? In order for you to make back to 20,000 ringgit, okay, you need to make 6.4%. You need to make 6.4%. Then only you'll be able to go back to 20,000 ringgit. So for every single time you are losing, okay, you need to make much more than that in order to go back to that area. Okay, but if you are controlling your size at 400 ringgit, okay, at 400 ringgit, what you need to make is the next time you just need to make back 400 ringgit with a control size, okay, to make back the money. And the third one will be the risk and reward ratio. Basically, risk and reward ratio, it tells us that how much risk that we are taking, okay, what is how for the risk that we are taking, what is the reward that we are looking. Okay, if the risk and reward is 1-to-1, it meaning for every 1 ringgit that I'm risking, I'm looking to get a 1 ringgit profit as well. And it also means that how many profitable trades that I need in order for me to recover one losing trade. Okay, if it is, for example, it is if the risk and reward ratio is 1-to-1 for every one losing trade, it also means I just need to make one profitable trades to cover it. Okay, so if today you already have if you already have a method and you already have a consistent trade winning rate out of these methods, then it's really simple for you to know whether you are a profitable trader or not based on the risk and reward ratio. Okay, imagine today if your trading methods give you a 50% winning rate. Okay, if your trading method is giving you a 50% winning rate, and most of the time you are just achieving 1-to-1, meaning you might losing 10 cents, but you also, most of the time you also may be making 10 cents. In that way, the best that you can achieve is just break even. But if your strategy able to achieve 50% winning rates, 50% of the time when you use this strategy, you are making money, and the risk and reward ratio is 2-to-1. Meaning, every time you make a win, you make 20 cents, and when you cut loss, you just cut 10 cents. Then it's definitely you will be profitable. Even though some days, if the winning rate dropped to 40%, you will still be slightly profitable. Okay. But if you are on 1-to-1, then with a 40% winning rate, then you'll be losing for that month using that strategy. Okay, so in order to achieve and in order to know whether your strategy will be profit or not, it's really important for you to set how much target that you're looking at and how much amount that you'll be willing to lose for this strategy. Put that down, calculate it, okay? Calculate it and execute it consistently. Then you know that what is the winning rate that you need in order to be profitable for that strategy. Okay, so risk and reward ratio is really important, especially you are already ongoing with a certain strategy on hand. Okay, and the last one will be the stop limits. Okay, stop limit is a function that actually help us to be disciplined, and also it is very useful for us when we are not able to monitor the market all the time. Okay, I do believe that everyone have a job himself, and he cannot be with the market all the time. So besides on talking to your dealers like us to alert you when the market's going hitting what price, or you can set a price alert on KYC screener. So if you do not know how to do that, you feel free to drop us a message on at the comment. Okay, we'll be contacting you and also sharing with you how to set a price alert and using KYC screener, which is a free apps. Okay, it's very useful as well. Okay, besides all this, you also can utilize the stop limit function that we have in our PC and mobile platform. Okay, it can help you to stop loss and sell the positions if the price drops to the stop loss level that you plan. Okay, and you also can put your stop loss immediately every time after you have entered a position, so that it can help you to be disciplined and just stop up the positions. Okay, with this stop limit, it can help us to execute and also implement what we have learned just now on the max losses that we can take. Set your max losses. Where is the losses? Where is the stop loss level for that max loss? Put it up every time when you enter a position, and embrace it. Okay, and not to forget that our stop limit orders, it come with the GTD validity. What does it mean? What does it mean is for this stop limit, it will able to stay in in the platform, okay, the stop loss order, it can stay in the platform up to 1 month time. So after you enter a position, as long it doesn't go to your profit taking level and it doesn't come down to the stop loss level, with this GDD function, the stop loss order will keep on stay in the platform up to 1 month. Okay, so even one day you forgot that you need to set the stop loss. You do not need to set the stop limit order every single day. It will be there for a month. Okay, so it's just one time thing. Every time you enter a position, you set it and it will be there for a month. Okay, yeah, but of course you still want to look into your what's the position, what's the condition of your position every single day. Yeah, okay, not to say you start the stop limit and then just go from it. Okay, CH okay, if capital is higher than 20%, do one use the 2% or other percentage? Okay, in the market, some of them they use 1%. Okay, if you're using 1% rules, then you can afford to make 100 times wrong decisions. Okay, if you use 2%, you can afford to take 50 times of a wrong wrong trades. Okay, so you have to ask yourself. Let's say if you are trading 100k, okay, would it bother you if for the one trade that you are losing 2k for 100k capital that you're willing to risk? Okay, if the 2k bothers you, then maybe you want to go to 1% rules. Okay, yeah, so setting it lower, it doesn't matter. What does really matter is whether if the losses bother you or not. Okay, you have to ask these questions. Ask this question honestly to yourself. Don't lie to yourself. Yeah, and okay. So how to set a stop limit order? One thing that you can do is you can scan this QR code, and it will teach you how to set it in our mobile platform. Okay. If you can screenshot it, you can take a picture of it so that you can play it later. Also can. Okay. Otherwise, what you can do is you can go into our PC platform, put up the order box. Okay. Press the cell and put up the order box, and then you can choose stop limit from here. Okay, and for under this validity, you can choose this, click this validity and set up to, and choose GDT and set the date up to 1 month time. Okay, so this is how it looks like on our mobile platform. Okay, when you're setting a stop limit order, there is two parts. One is called stop price and one is called price. So what does it mean? Stop price, it means this is the price that it will activate the stop limit order. Although you have put in the stop loss order, the stop loss order will be slipping in our platform, so-called slipping. Okay, so only when the price it hit the stop price, the stop price is traded, then it will wake up and activate the stop limit to send the order to sell at the price that key in. Okay, so for example, right now BJ Corp, okay, BJ Corp Berjaya Corporation is trading at 34 cents, and if the Berjaya Corp drop to 32 cents, okay, if the Berjaya Corp drop to 32 cents, I would want to sell the share. Okay, I would want to sell the share. I want to sell the share with the lowest that I can accept is 31 cents. Okay, so what we need to do is we need to set our stop price to be 32 cents. Okay, so it means anytime when Berjaya Corp, the share price drop to 32 cents, this stop limit order will become active, become a normal order, and sell Berjaya Corp at 31 cents. Okay, so if during that time the market has 32, there is still 32 cents at the bids at the buy side, then our order will sell immediately to 32 cents. Okay, it will sell immediately to 32 cents and match at 32. Okay, but if the buyer part is already 31.5 cents or even 31 cents, our order will still execute and match at the lowest 31 cents, which is the maximum loss, that maximum lower price that we're willing to take. Okay, so if you only want to sell at 32 cents, then you may set your stop loss at 32 cents and the price also at 32 cents. But do bear in mind that in a high volatility market, your order might not be matched and it will stay in the market to queue to sell at 32 cents. Yeah, okay. Yeah, because if there's no buyer at 32 cents, then your order will be queuing as a sell order rather than matching. Okay, so just for example, this is the bid and ask. Bid and ask 32 cents and 32.5 cents. Okay, for example, if today, when I'm selling BJ Cup, I'm selling just 100 lots at 32 cent stop limits. Okay, then it will match all at 32 cents. Okay, it will match all at 32 cents. Even my price is 31 cents. Okay, but what if my stop limit order is 200 lots at 31 cents? Okay, the first 100 lots, it will trade the first 32 cents, and the next 100 lots will trade the next best buyer, which is 31.5 cents. So my 200 lots will do, half of it will match at 32 cents and half of it will match at 31.5 cents. And if my stop limit order is 400 lots, okay, then I will be giving to 100 lots to 32, 200 lots to 31.5, and the remaining last 100 lots then only will give to 31. Okay, so net my average for the 400 lots of stop limit order, it will still at 31.5 cents. And if the stop limit order is even bigger at 800 lots, then what we'll be seeing is after clearing all the way to 31 cents, we only match 600 units. Then the remaining 300 units of BJ Corporation will be queuing at the offer, queuing to sell at 31 cents, the remaining 200 lots. Okay, so this is the idea. Okay, so don't worry if you think that today I'm putting my stop loss at 32 cents, but the max that I can take is 30 cents, then you can put the stop price as 32 and then the price at 30 cents. So it will match any price from 32 all the way to 30 based on the best price. Okay, so so that will be the idea. So if you still not clear about it, do feel free to PM us and then we can get you through. Okay, and besides the how to use the function, okay, you also really want to also take note that for the stop limit order, okay, the price, it will always have to be lower than the stop price for sell stop limit. Okay, because the price will set the lower range of the price that you will be willing to execute, willing to stop out. Okay, and also another thing that you need to take note is at one time you can only place a normal sell order for profit taking or a sell stop limit order. You cannot place both of them together. So what you can do is every time when you execute a trade, you can put in a stop loss, okay, and monitor closely on the price. If it come near to your profit taking levels, then you can cancel the stop loss and put it in, okay. Or what you can do is you can always put a order to take profit, and when it trades near to your stop loss lab area, cancel the sell order and place a stop loss if you have to be away. Okay. All right. So here comes to our last section for the day. Okay, we have been talking about stop loss, all this. We have been talking about the mindset, why we want to manage the risk, how we want to set the trading size, how we want to setting the maximum losses that we can handle in one trade, and how to put the stop loss order, all this through in our platform. And the last questions, how we can set a stop loss, how to decide which area is your stop loss. Okay, All right. So for this, we will go into a chart. Okay, we go into a chart. Okay, let's look at this is capital A, which is also known as Asia last time. Okay, okay, Asia. Okay, okay. All right. Okay, let's look at capital A. If to how we can decide where to stop out on our position is as a trader we always believe that how you enter the position and that is how you should exit the positions. Okay, if today you're entering the stocks based on fundamental, okay, then you should exit it, okay, based on fundamental as well. Okay, if you think that you're buying it on the fundamental, believing that it will be profitable or it will be making money, okay, a certain time frame. Similarly, if you have changed your mind and don't think, or a lot of facts telling you that he is not gonna be making that kind of profits, making achieving what your expectation is, then you should just cut the position. Okay, as simple as that. There's no technical or this involved. Okay, as long what you're expecting is no longer exits, then you should just cut it. For those who are buying on the fundamental. Okay, and that also the reason why for fundamentals to take a loss, normally they will have a really painful losses. Okay, so that's why we need to decide our loss ahead of before we enter the position. Okay, but if we go into technical, okay, if we go into technical, how should we set a stop loss? Okay, okay, today I'm gonna share with you guys two methods of setting a stop loss. Okay, first is based on candlestick. Okay, first is based on candlestick, based on the trend. Okay, I believe you guys know that how we can define a trend is based on higher high and higher low. Okay, so you can see a downtrend is a lower high and lower low. What we are seeing here, correct? Okay, lower high, lower low. Okay, we can see lower high and lower low happening. Okay, so once it has turned into a higher low, a higher high, okay, and then also a higher low, okay, it is telling us that the trend is turning. Okay, the trend is turning. So if we are buying on the breakout, when it break out to become a higher high at this level of 83 cents, then our stop loss should be at the previous low, which is right over here. Okay, okay, and as long the price doesn't come and break below this level, then we still want to ride on the winner. Okay, all right. Okay, so after it pull back and as long it go higher, okay, we can see that it has been going higher from there, and this is the lowest area that it pull back. Okay, so this will be the stop loss for this position. Okay, next we see it. Next we see that it pull back. Again, we see the pullback happening. Okay, we see a pullback happening over here, and it has been trying to rebound, testing the same level again, and then trying to rebound, and in the end, it failed to rebound. Okay, so we can see that this is the level whereby it has break into a lower low. Okay, a lower low happening right here, and this should be our stop loss. As it break below the 1 ringgit 10 cents or 1 ringgit 09 levels, and this is where we should stop. We should stop it accordingly. Okay, because it might turn back into a downtrend. Okay, and in fact, it really does turn into a downtrend. Okay, and if you hesitated, you want to bet that it might continue to go higher, okay, which is not good. Okay, the next that you can do is the confirmation of the downtrend, which is right over here at 94.5 cents. That's another chance for you to stop loss and also convince yourself that it is turning into a downtrend. Okay, when it break below 94 cents. We can see. So even if you cut at 94 cents, it still saves you more than 10%, okay, from the price going lower. Okay, at this moment, the lowest it gone is 82 cents from here. Okay, all right, okay. But in the event that if you are entering using moving average, okay, if you're entering using moving average, let's say you are buying based on the MA rebound method that I have been sharing on the webinar, okay, which is the price pullback to the 20 days moving average, this line, okay, and rebound break higher, then you'll be buying at this level, okay, all right. How you can get out is when the price break below the MA, okay. So we can see we can ride through the whole uptrend as long it doesn't trade below the MA, then we will be still holding the position. So once it trade and close below the MA, then that is the time that we really want to stop out and exit the position. And of course, you can tell me that, hey, okay, if I sell here, if I sell at this point at 83.5 cents, the price rebounded all the way to 93 cents. Yeah, it rebounded, okay. There will be time whereby it just make a false break and then rebound higher, okay. But eventually in the long run, it will save you more because the chances of this happening is much lower than from this happening. So imagine for every single 5 to 10 cents losses that you save, okay, you'll be able to cover the gain that you miss over here. Okay, yeah. So how you get into the position, and that is how you want to get out from your position as well. Do remember that. Okay. All right. So that will be the two methods that we can set our stop loss. Okay, and get out from the position when something is not right. All right. Okay. So that will mark the end of our session today. Okay, and it's also already hitting 9 p.m. already, 9:15 right now. Okay, so if you have any questions, you can always feel free to put into the chat box. Okay, and for those who wish to open account, you can feel free to scan this QR code, and that will lead us to our online account opening. Okay, and in order to open the account under my team, you just key either D200 or D300 under the dealer codes. Yeah. Okay. Then once your account is open, our dealer will contact you and also guide you truly on how to trade, how to activate your account, how to trade, and also share with you with all this market information. All right. Okay. So let's look at the chat box. Okay, Mr. Tang, Mr. Tang Kok Hong. Okay. Mr. Tang is asking, the app or web can add one more function to set for sell and set for stop loss together. Okay, there is an options that we are exploring, which is called one cancel another, whereby we will be able to set sell price and also the stop loss price together. Okay, and we are exploring into these options, and hopefully we're able to push it out and also offer to our client at the soonest possible. Yeah. Okay, so we are already exploring this, and once it is available, we will put it up, and also I will even do a session to share with you guys on how to do it correctly in this market. Okay, yep. So Mr. Tang, just put on a seatbelt, continue to ride with us, and very soon we will see this function coming up. Okay, yep. Any other questions? Okay, so right now, so if you have questions, you can put it up. Okay, otherwise we will end our session in another 3 to 5 minutes. Okay, yep. So right now it's 9:15, 9:16. Another 15 minutes more, the US market gonna open. Okay, so at this moment, if we look at investing.com, we can see that investing.com and index futures, we can see the US market is actually in green. Okay, so and Nasdaq Nasdaq. Okay, Nasdaq is performing well. Okay, so hopefully it holds and we can see a good footing tomorrow. Okay, and to end our index and our markets in green, in positive tomorrow before the long weekend holiday. Okay, yeah, and just to remind for those who are still not aware, next week, Monday, Tuesday, Wednesday, the market will be closed on Labor Day and also Hari Raya. Okay, the market will only reopen on Thursday. Okay, so for those who do not wish to have the the risk exposure throughout these 3 days that when the market is closed while the global market they are still trading, okay, then you might want to look into your portfolio and also reduce some of your position if necessary. Okay, you do advise to you do encourage to check with your dealers on all this. Okay, yep. Okay, so I think that's if there's no other questions, then we shall end our section here today. Yeah. Okay. Thank you for joining the sections, and for those who are traveling, for those who are hitting the roads, okay, please be safe when traveling. Okay. Have a good rest and also enjoy the long weekend holidays. Selamat Hari Raya. Selamat Hari Raya and good night, everyone. Thank you very much.